Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to talk about some of the most interesting financial market themes that I'm observing and also give you a few key takeaways to help you navigate the markets yourself. All right, so today's all about inflation to start because we just had the May report come in at 5% year over year growth rate. Let's talk about why we're seeing such high inflation. Number two, some concern about the labor market. The job applicants have been a little slow to come to the table, but why that may be improving soon. And then talking about the stock market, market breadth, the measure of how many stocks and industries are actually participating in the strong bull market trend that we are currently seeing from the S&P 500. It looks pretty good right now. So big reasons why we are seeing this inflation: base effects, reopening industries, and supply chains. So let's start with base effects. All right, what is that? Base effects are pretty simply, just mathematically speaking, if you're going to calculate a 12-month growth rate, your starting point is going to be 12 months ago. Now, what happened 12 months ago? We were in the heart of the pandemic with the economy mostly shut down. So it makes sense when your comparable is a really low point, it's going to be really high right now. Okay, so that's obviously something that's not going to persist, but that's something that is baked into the calculations right now. Now, the other part, if you look at the reports, most of the increases in prices and services outside of energy are some of those reopening parts of the economy. Think hotels, airlines, rental car agencies. Okay. Again, these are parts of the economy that were closed and are now opening. Makes sense that prices are going to jump up relative to 12 months ago. Now, I talked about cars, and it's going to be a good example of the supply chains when we look at some of the bottlenecks in the economy. The rental car agencies completely depleted their inventory during COVID because of all the uncertainty. And at the same time, when the demand came back, they went to the market to replenish that inventory. And guess what? The new car manufacturers are dealing with a shortage from the semiconductor industry, which are major components of vehicles at this time. And so there's no new cars. The lots are half empty. And so rental car agencies are now flooding the used car market. So this is just one example of all the types of bottlenecks and sort of kinks in the supply chain that the economy is dealing with. When you turn an economy off, it turns out you can't quite just turn it back on with a light switch. These are some of the challenges that the economy is facing right now. Now, the jobs market, labor participation has been a little lackluster during the past couple of months. But if you look at these stats, I think it could be improving. Now, the 12 most open states, 29% of the population, with only 21% of the amount of continuing jobless claims. Now, contrast that with the 12 most closed states, states that don't have their economies up and running in the way that these other states do. 34% of the population with 45% of the total continuing jobless claims nationwide. Right? That's a big number. What that means is as vaccinations improve, as those economies reopen, we're going to continue to see those workers start to seek jobs in those markets. And finally, let's talk about market breadth. It's a little bit of a busy chart, but I'll walk you through it here. The shaded green areas, the percentage of New York Stock Exchange securities that are above their 200-day moving average. It currently sits at 80%. Now, what's that mean? That tells me that 8 out of 10 stocks on the New York Stock Exchange are above their 200-day moving average and in an uptrend. Now, if you look back historically, as signified by the blue rectangles there, last time we saw this type of extreme positive market breadth tend to be at the early stages of bull markets, post-tech bubble, post-financial crisis. And on the flip side, if you actually look at when we've seen lower market breadth, back to the tech bubble and the financial crisis, and even the recent pandemic, you see between 53 and 62%. So a much weaker market breadth across the stock market. And that's a good sign. That basically means there's a lot of different stocks and industries participating in the uptrend right now. And historically, that bodes well for higher prices. Now, finally, I want to thank everyone for watching, but be safe out there. The Brood X cicadas, they come out once every 17 years, have reached surface, and they're causing some problems. We had the White House press plane was delayed after they caused mechanical problems. We had a driver out of Cincinnati, Ohio, apparently was hit in the face with a cicada, swerved to get out of the way and hit a pole. And they're even seeing some of them on the weather radar, billions across the Midwest and East. Now, these fellas have a pretty interesting life. Once they hatch, they burrow in the dirt for 17 years and then come out for about 4 to 6 weeks. So that means late June, early July is when their life ends. Spend 4 to 6 weeks reproducing, mating, things like that. So if you're out there, be safe, keep your head up and your eyes open, and be on the lookout for the cicadas. But stay safe, and I'll see you next week.